but there are so much else which is doing well. So it's discerning in that sense. Mithun Aswath is with us, managing partner at Kivah Advisors. Mithun, good to have you with us here. Thanks for your time. We were just talking about Zomato. Why don't we, since it's by far the largest volume traded gainer on the NSE today, I'm assuming so, lots of interest there. At this market cap, will you make a lot of money buying it? It seems compelling enough, but how would you think about this one?
Afternoon, Prashant. I think we've played this whole internet space through Naukri or Infoedge, which gives you a holistic exposure across Zomato as well as Policy Bazaar, as well as their own business, Naukri, 99 Acres, and Jeevan Sati. And also they have several investments in startups which they've made. So that's the way we've been playing it. Obviously, Zomato is helping Infoedge as well, because close to, I think, about 50% of the market cap of Infoedge is now the investments it has in Zomato and Policy Bazaar. So we continue to be quite positive on Infoedge because we do see some rebound in the hiring as well happening. And if that happens, their core business will start growing, and that will bode well for the company.
Hi, Mithun. Good afternoon, and good to see you in. Well, the other stock that's on your radar is BHEL. 15 months ago, it was available at around 80 rupees. Now it's at more than 300 rupees, but you believe it's still offering good value? What do you like about it? The big order book that they're sitting on, and you believe execution is going to, come on stream from here on?
Yeah, afternoon, Nigel. Obviously, BHEL is a little bit of an enigma. The revenues have still not kicked in, but the order book, which was not there maybe a year ago, has ballooned. It's over about 1.3 lakh crores, and their last year revenue was about 23,000 crores. If you look at BHEL, what are they addressing? They're addressing the power sector, where the government's focus is, especially on the thermal side. They are likely to get about 10 gigawatts of orders every year for the next 4 to 5 years. As well as on the transmission side, the government there's a very large spend, and annually there as well, BHEL is likely to get large orders. So if we are going to have a company which is going to get 80,000 crores of orders annually for the next 4 to 5 years, execution and revenues is just a consequence of that. At the current revenues of 23,000 crores, they are less than half their peak revenues, which they used to do in FY 11, 12, 13, which was in the order of 50,000 crores. So I think, it really presents that make in India opportunity. Obviously, the stock has done well, but we think the upside from here is mainly going to come when the numbers start flowing through. Even the current quarter, the numbers don't look too great. But I think when we get to the second half, we will start seeing maybe the fresh orders, which were more remunerative, start getting booked. And then I think the street will start paying heed to it.
I was just going to ask you that, Mithun, hi. Yeah, it was a pretty disappointing quarter, right? Because the losses continued at the EBITDA level, at the PAT level for BHEL. So you're saying maybe second half is when we'll start seeing the improvement come through. Anything else in this space, capex, heavy industrials? Because not just BHEL, a lot of other stocks have also run up very, very hard. So one has to tread with caution. Do you like anything else here?
No, this was one which we just thought, we can't avoid it because it is so large in scale, and it would address literally the thermal, the transmission, nuclear energy, all of it. And even they're making inroads into, the railway side with they're only developing their own Kavach as well. So I think they're addressing very large pockets where the government has a massive thrust over the next few years. So it's inevitable that they are going to get large orders, and it's just a matter of execution. And I think we just sit tight and let things kind of unravel itself.
Mithun, would you recommend subscribing to Oli Electric IPO, or would you give it a pass?
Honestly, Reema, I think it'll take some time. for us to digest, understand how the numbers are going to unfold. It's still not very profitable. And we've played this through Tata Motors. And you know that Tata Motors is also going through a demerger, where the commercial vehicle business and passenger vehicle businesses will be in two separate listed companies. So I think there we see a little bit more of scale. They have also, it's not a proof of concept. You've seen actually delivery, they have the largest market share. So, and also they are going to turn debt free by the end of this fiscal at a complete group level. So I think if we were to play, the electric vehicle theme, we would continue to be focused there. However, let the listing happen, let a few quarters pass by, and then I think we will relook at this.
You also owned Eicher Motors in the past. Eicher Motors sales numbers for the last few quarters have been a bit stagnant on the RE side, Royal Enfield. The stock's done well, especially in the last 3 months. You've seen the stock rally from levels of about, 4,000 to 4,700. But the medium-term view on Eicher Motors?
I think we continue to remain fairly positive. You will have these months where there is underperformance in sales. But if you start monitoring a little closely, the above 350cc sales have continued to grow every month over the last few months, despite the other category coming down. So I think they continue to premiumize, and Eicher continues to do reasonably well there. They will also come with a slew of launches. I think they're also looking at an EV bike in the next year. So we continue to be quite positive there because the addressable market is only going to grow. And compared to the other two-wheeler manufacturers, their sales is still quite small.
Okay, so finally on the market overall, are you still constructive? Are you still confident of deploying money? And I know we've been at elevated levels, right? 25,000 was hit this week. But there's a lot of chatter, for instance, regulatory chatter on F&O. Then we are seeing this volatility in global markets, question mark on global growth, etc. So overall, are you waiting on the sidelines for a bigger dip to buy, or do you think one just has to keep moving ahead with this market without over-analyzing?
I think obviously there are concerns on potentially how the US will do. Will there be a soft landing? There's already talk about interest rate cuts there. You've seen the ECB cut, the Bank of England cut yesterday. You could see the Fed cut in September. But we don't want to get into a cutting cycle where the economy is slowing down rapidly. So I think that will be the biggest risk for markets, where interest rates are being cut while markets continue to fall. So that is something that we need to monitor closely. Having said that, I think in India, opportunities are present in some spaces which have kind of underperformed over the last few quarters. I think, a little bit of, you saw some bright spots in the IT services businesses. We are also seeing some green shoots in the consumption side, especially on the rural consumption side. So I think there are pockets. I think it's going to be rotation. Obviously, at the 25,000 Nifty levels, at the headline index level, is it looking cheap? I don't think so. So it could be rotation out of some sectors where, growth is not coming, while, the expected growth in other sectors which have underperformed will start driving the market.
Okay. All right, Mithun, thanks a lot for joining in and filling us in with your quick take. Wishing you a good Friday.